the bigger picture is that the bottom was about 5 years ago. And we've been seeing 2 steps forward, 1 step back, sawtooth pattern in uranium for years now. Mm-hmm. And that trend remains unviolated on a technical basis going upward. So I'm not a technician. My technical friends tell me this. But I think that's really important. That's the context. So you could just say that what happened this year was par for the course. That's what uranium has been doing for the last several years. I think it's important because there are a lot of sort of headline news items that could be seen as explanatory, but this was already going on. And I think that matters. I think what happened last year with SPUT, the Sprott Uranium Trust, hoovering up all those low-cost pounds, removing them from the market, was a real game changer. And we were seeing higher prices going into 2022 before the major headlines that move things around. Now, of course, the advent of the war in Europe had a big impact. But initially, actually, the impact was negative for uranium. We had scares about shelling around the Zaporizhzhia nuclear power plant, largest nuclear plant in Europe. And could there be a big disaster that actually hurt spot uranium prices and hurt the companies more? And then later we had the sanctions, or the fear of sanctions, and particularly fear that Kazakhstan might get caught up on the Russian side of the new Iron Curtain. And of course, Kazakhstan is the largest and lowest cost producer of uranium in the world. So these things, I think, contributed to extra volatility, an extra size 2 steps forward this year. And then, the plant didn't have a meltdown, and Kazakhstan didn't get cut off from supplying the world uranium. You have more specialty issues with products, enriched uranium from Russia, but generally speaking, uranium itself is doing okay, and the supply hasn't gone away because of these things. So we saw a big surge. We saw the market realize, hey, things aren't so bad. It's come back. But that doesn't mean that's the end of the day. Remember the bigger picture, the 5-year that I'm talking about of 2 steps forward, 1 step back. We just saw a particularly large step forward and step back. And the good news is that in this step back, I do think that is a buying opportunity. The fundamentals backed up by the technicals, but I'm a fundamentalist. They've really never looked better in my career for uranium. The about face in Europe, the number of plants that the BRICS countries are building, the new advanced nuclear that's being built in Canada and China, and the US is pushing in that direction. I mean, even Greta Thunberg said that Germany shouldn't shut down its last nuclear reactors. I mean, she's not the leading expert on uranium that I would consult first. But that tells you something about the momentum in this space. It's an idea whose time has come. And so I do see the current step back as an opportunity. My forecast is that over the course of 2023, we will see uranium hit the incentive price. And, we'd have guests on these shows and ask them, well, I think it's this, I think it's that. Well, we're starting to see what that is, because the developers out there, the people that have been sitting on uranium projects for years, waiting for higher prices, they are starting to build those mines now. That has started to happen now. So that incentive is visibly on the horizon. And then there's one more data point I'll put in here, and that is just this week. This is quite timely. We're having this conversation. I'm not just a uranium bug. I do cover other things, but this is very timely. The United States government has been talking about setting up this national uranium stockpile, just like the Strategic Petroleum Reserve.
Yeah.
And they finally started doing that. And those contracts, we've finally starting to see prices come out now. Several of the U.S. Producers or stockpilers or mothballed producers, they've got uranium. Several of them have announced new sales contracts with the United States government. The prices are plus or minus around 60. So when you talk about incentive pricing, a lot of those guys, they have these uranium pounds on the books at, $20, $30, whatever they mined them at, So this is a big deal for them. But just think about what's happening. One, we have a new buyer on the market that wasn't there before. That's important. Two, you've got people with pounds, primary producers that are willing to sell them $60 to $70. That tells us something. This is real data, not just wool gathering about incentive prices. So my forecast is we'll probably see uranium head higher over the next year. Easily, 60 is very easy as a floor. 70, I think, is doable, maybe up to 80. Markets overshoot. Maybe it goes to $100 or something like that, just because people get excited.
Okay.
But I think it settles above the incentive price because that's what supplies the market. The incentive price is basically everything, kitchen sink in there too, that you need to be able to make money. And that includes cost of capital too, right? So it's your financing cost as well. So it's much more than just, it cost me $40 to mine this pound of uranium. I need a lot more than $40 to make the whole business worthwhile. And what we're starting to see is, the guesses we had before of, 60, 70, 60 is probably for the low cost. For the whole industry, maybe 70 or 80 is what the data is starting to tell us now. And that means that uranium has, it's still, unlike almost any other metal or commodity you can think of, it's still below the cost that's required to incent its supply to the marketplace. And that makes me extremely bullish in this space.